The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Gail in Tampa. Hey, Gail, what's going on?
Hey, love your program. You're amazing.
How long have you been listening?
Oh, my gosh. Well, off and on for about maybe, 6, 7 years.
Oh.
I mean, just on the radio, didn't understand the TV. And then I go out to Seattle once a year. We have a trading club out there.
Okay.
And then he started talking in class about your book, and I'm like, wait a minute, that's the guy that I listened to in Florida. And then I started watching your TV live, and it's just amazing. I need to become a tigress.
Well, you're already a tigress. See, you've been out there 6 years. See, once you check in to TFNN, you can't check out. It's like Hotel California. It's pretty sick, I know.
No, it's great. And I have some gold I want to try to get over to you, and then I want to buy some coins for my grandkids. So I appreciate what you're doing. I think it's amazing. You're just really amazing. Thank you very much.
Well, I appreciate it. Thank you so much.
Now, Tom O'Brien.
Happy 4th of July, Money Masters and Treasure Hunters. Welcome to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he is on vacation. Now, today's show, folks, today is one that you're going to want to replay over and over again. And we think that today's show is so important that this is going to be archived on Channel 5 on Tiger TV. So if you're not familiar with TFNN, go to the homepage at TFNN.com. Up in the top section, you will see Tiger TV, and what you'll want to do is you want to click on Channel 5 there. That is called Recommended Viewing, so you'll be able to see this show over and over again. It is absolutely, the 4th of July. Hopefully you're off to a fantastic start of your day and evening. It is Independence Day, folks, and therefore this show is going to be about your financial independence. So this is a really important show, folks. And, America, if you think about it, America is really unique because it offers you an economic ladder to climb. And here's what's so exciting. Folks, the bottom of the ladder, and I've been there before, the view is not so good and it's awfully darn crowded. But if you climb with me to the top of the ladder, folks, you're going to see a lot less crowds. So if you don't like crowds, you're going to see a lot less crowds. And the view, folks, it's absolutely extraordinary. This is the 4th of July. This is about your financial independence. And folks, if you're not familiar with me, I kick things off for TFNN each morning at 9 o'clock. I do a show called The Trader's Edge. So if you're wondering, what the markets are doing, because certainly you wake up in the morning, you hear CNBC, and they tell you where the markets are at. But I absolutely will tell you where the markets are going, what you can look for. So you can always catch the archives of those shows on Channel 9. Then from 10 to 11 o'clock, Tom and I do a show called The Money Masters. And really, this is all about being able to teach you how to become a money master out there. And so Tom and I do that show. That is archived on Channel 10. And I also have a wonderful newsletter service. We're just about to, in fact, we did have our anniversary, our 1-year anniversary. I kicked that off on July 1st. We'll take a quick peek at that. It produced on an annual basis, folks, over 30% return on your money. So hopefully you're getting that type of return on your money. And, folks, the other thing here, and what's really key, is I really do treasure your time. So I treasure your presence, and my outcome is to absolutely help you to become a better money master. Now here, I'm going to inspire you, and what I'm mostly going to do is I'm going to teach you how to live an inspired life. Because to me, living an inspired life is that is really what it's all about. So let's go take a look at one of our tools, the tool of personal development, folks. Now, the best advice I ever gave my kids on the subject of personal development is this. You might want to write this down. You might want to give this advice to your children as well. And that's this. You must take personal investment. You must make personal investment for the present to get ready for the future, folks. That means you got to invest in today in order to be able to get ready for your future. And the personal investment, folks, that you've got to make is one in education. You've got to make an investment in discipline. That's why I teach you how to trade patterns that are out there. And I certainly want you to make an investment in your personal discovery. And today is all about a day of discovery. And so the things that I'm going to cover during the next hour, I'm going to cover the 3 ways that you grow your business. Now, this is your trading business out there, folks, but this applies to any business. So if you're a sales executive, if you're just simply an executive of business, maybe you run a subsidiary, whatever it is that you're doing, maybe you're just simply a wonderful entrepreneur. There are really 3 ways that you can grow any business. I'm going to show you what those are, show you how you apply that to your own trading system or your own investing system. And what that is all about, I'm going to talk to you about trading expectancy. You see, if you really want to have independence, if you really want to set yourself free, what you'll understand is what is the expectancy of your trading system. So I'm going to show you how to set up those calculations. You can go back through your historical information if you want. I'll show you what the expectancy of my trading system is. Then I'm going to show you how to trade. I'm going to show you that power of 1%, and I'm going to share with you a tool that you can get on the homepage of TFNN.com. So you'll be able to see that. You'll be able to use that tool for free for the next 30 days. And this is a tool that no trader, investor, doesn't matter what level of skill you have, you do not want to be without this tool. And then lastly, we'll cover some of the longer term. Maybe some of you, hopefully all of you, have ordered the special free report that I did that helps you to understand how to manage your long-term investments. If you go over to the homepage of TFNN.com, you will see special report, free report. Click on that. You'll get an email back that allows you to double opt in. Then you'll get a copy of that report. I'm going to cover some of that here today, some of the calculations that are involved with that as well. Now, folks, all wealth absolutely begins and ends in the mind. I mean, this is absolutely a psychological game. You know, the best quote out there, they talk about 80-20 rules. I'm sure you've heard that. 80% of trading is psychological. The other 20% maybe is technique or what have you. Well, I think it's more like this. 80% of trading is psychological. The other 20%, folks, is in your head. Think about it. It's 100% psychologically. And what I want you to do is I want you to be able to constantly improve your capacity, because when you do that, folks, what happens is you will reap extraordinary rewards. And I want you to have extraordinary rewards. Most folks don't reach up for those. They stop right before they get to that level. And all you need are really three elements in order to be able to have emotional certainty. And when it comes to trading or investing, it really is about emotional certainty. And those 3 pillars are the strategies of trading. We can talk about the strategies of trading. We do that all the time here at TFNN.com, whether we're showing you A to B equals CD patterns, retracements. But we show you the strategies of trading. It's all about being able to take consistent action and understand precise outcomes. Today is really going to be about understanding precise outcomes. I'm going to give you the emotional certainty, or show you how to be able to obtain the emotional certainty, folks, because emotional certainty, it is a decision, not a reward. Now, the 3 ways to grow any business boils down to these 3 things. So if you're just listening, even if you're not an investor or trader, you're going to want to write these things down. If you own a business, the 3 ways are, number 1 is to increase the number of clients that you have. Makes sense, right? Increase the number of clients. When it comes to trading, you're going to see that is called increasing the expectancy. The number 2 way to grow any business is increase the average transaction value. You know, whatever it is you sell, if you can sell the same number of customers, but you can increase the average transaction value, you're going to be able to grow your business. What we call in trading, that is simply compounding or adding to your capital. You know, taking some of the hard-earned money. We know how hard you work for your money. I want to show you how you make your money work hard for you. That is the 2nd way. The 3rd way is to increase the frequency at which customers repurchase from you. What we call in trading, that's finding more trades. So again, the 3 ways to grow any business: increase your number of clients, increase the average transaction value, and thirdly, increase the frequency that they purchase from you. When it comes to trading, those 3 ways are increase the expectancy of your trading system, increase the capital that you have in there, put additional capital in, and number 3, find more trades. That's what it's all about. Now, when we talk about the expectancy of a trading system, here are the 3 categories. Now, if you're watching us on Tiger TV, and again, you can catch the archive of this on Channel 5 under recommended viewing, so you can watch this over and over again. I've got 3 blue arrows that show you the 3 areas that you would focus on in order to be able to grow your business. Now, a trading system is made up of a distribution of wins and losses, and there's 3 areas of wins and losses that you need to monitor, that you need to be keeping track of. Because if you don't keep track track, then you have no idea what your trading system offers. And I want you to be able to have exactness. I want you to have emotional certainty. So you're going to break your trading system down into 3 categories. You're going to have your winning percentage category. That's number 1. It doesn't matter what kind of wins they are. You just want, I'm talking about break even or wins. To me, if you break even, that's still a winning trade out there. It's when you lose money, we're going to go ahead and we're going to take your losses and break those down into 2 separate areas. Your first one is going to be your controllable loss. I'm going to teach you, if you don't already use this today, I'm going to teach you how you risk only 1% of your trading capital on any one trade. So you want to stay with me because I'm going to show you how to do that. And when you do that, folks, that also means I'm going to teach you how you use stops. I'm going to show you the best ways for you to be able to use stops. And so your controllable loss is when you've put a stop in place and the market takes you out at that. That means you've lost 100% of what you risk. But that's only going to be 1% of your trading capital. The other element is going to be that uncontrollable loss. I don't know if you've ever had this experience, but sometimes you can have a stop in place, and that stop will get jumped, folks. That's what you call uncontrollable loss. Those 3 areas. When we come back, we're going to talk about how you determine your expectancy of your trading system, understand those distribution factors, understand your win-loss rate, and I'm going to teach you how to grow your business. This is the 4th of July, and this is about your financial independence, folks. Steve Rhodes filling in for Tom O'Brien. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gained access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, and happy July 4th to you. I hope you're having a fantastic day out there. This is a special July 4th edition. This is about celebrating your financial independence. I'm going to teach you how to step up that ladder, how to get to the top rung of the ladder of your financial independence. And when we left off in the last segment, we just started to begin on understanding the expectancy of your trading system. Folks, understand this one tool here. This will make you more money. This will give you more emotional certainty than anything else that you can possibly do when it comes to trading and investing. So again, we're talking about the three factors that we're going to focus in on. First is how you actually go ahead and calculate your expectancy calculation. Now, I want you to always think in terms of risk, because thinking in terms of risk, not what percentage return you might have gotten, it's really about understanding and thinking in terms of risk. Why? Because you want to always make sure that you're doing everything you can to protect your capital, protect your assets out there. And you want to be able to stay in the market or understand how to get out of the market. I want you to be able to understand the expectancy calculation. So there's three areas. You're going to take your trades, break them down into three sections. Your winning trades, your controllable loss trades. Again, those are trades where you've identified an exact stop. If the market takes you out, you've lost 100% of whatever it is you risked. Then you have that uncontrollable stop. Sometimes you might be an investor in an ETF, a stock. So, there's bad news that comes out and your stop just simply gets jumped. That's what I call your uncontrollable risk out there. Then I'm going to show you the calculations a little bit later in the show, so you're going to want to absolutely stay tuned to show you how to actually calculate those factors. When you come up with what your winning percentage factor is, and the factor here that I'm talking about is a factor of your risk. So in this case here, in this example, this would say for every dollar, and you take a look at the winning percentage factor, for every dollar you risk, you make $1.06. Now maybe your trading system provides you with a 2-to-1 or a 3-to-1 reward to risk factor. This example here, I'm just using $1.06. You risk $1, you make $1.06. In the controllable loss, that gives you 67% win versus loss percentage of your distribution of wins and losses. In your controllable loss, now most trading systems, now it depends on what you actually trade, but most trading systems, about 5% of the time, you're going to have an uncontrollable loss out there. Just simply meaning you use good money management, you put the stop in there, but your stop gets jumped. And so about 5% of the time, that means you're going to risk, you're going to lose more than 100% of what you put in there. In this case here, this says you would risk $1, you would lose $1.55 in this example. Your controllable loss, now, in your controllable loss, even if you risk 1%, as the trade is going on, oftentimes you're going to go ahead and adjust your stops. And so if you adjust your stops, what that's really going to give you is that's going to give you less than a 1% factor of risk. In this case here, even though we risked 1%, this is saying you're only going to lose 82 cents on every dollar that you risk on your controllable factor. Let me show you on the spreadsheet. Let me show you the real magic of this, because what happens is, and I don't know if this applies to you, but what I found in going out and teaching so many people about understanding the expectancy of their trading system, when they're in a trade, when they're in an investment, they're very focused on that investment, even when they don't have all their capital put to work for them. And you spend time taking a look at the ticker, watching it go up tick by tick. And what you're doing is real treasure hunters out there. And I know each of you are a treasure hunter. What you really want to do is, when you understand the expectancy of your trading system, and this is the beauty, folks, what you want to do is you want to go out there and find more trades. This is live data. This is the actual results. This is through June 27th. We're taping this on June 27th. We've had 105 trades that we've closed out. We're actually in 3 trades right now that are still still open. And so our annual return, so this newsletter, I began this last July 1st. So this is our anniversary, if you will. And during that 1 year period, we've produced an annual return of 31%. If you were one of my subscribers with me from the beginning, took every single one of our trades here, you would have a 31% return on your capital. On 100 grand, that would be a $30,000 return. Now, understand this about your trading system. Doesn't matter whether it's yours, whether it's mine. You want to understand what that expectancy factor is. In my case here, it's a 0.28. Anything positive is absolutely excellent. You want to try to improve that as much as you can. But once you have 100 trades, then what you can do is you can rely, and you just trade those same patterns, you can rely on you ending up each year with about a 0.28 factor. That's simply how this works, because the more trades you have, the more consistent you are, the more you just simply stay with trading the existing patterns that you trade. Then it's a matter of going out and finding those opportunities. And they are abound. They are all over there. When you consider the number of ETFs out there, the number of stocks that are out there. And see, the reason why you don't want to focus on your existing trade, you want to be a treasure hunter, go find more trades, because in this case here, if you just assume that you got these results, you ended up with a 0.28 expectancy factor, folks. Look what happens if I change my trades from 108, and that's what we've done so far in the newsletter here. What if you found 50% more trades? So what if you, instead of having 108, I'm just going to add 50 trades to it, we go to 158. Watch what happens as you're taking a look at an estimated profit line. 158. What does that do? That turns your return into a 45% return. You see, you didn't have to work on developing a better trading system, because in this case here, you knew that your trading system gave you a positive expectancy. See, a lot of times people are searching for the holy grail, looking for a new indicator, a new technique, looking for some way to improve their trading system. What I suggest you do, because of all the information that's available to you, I suggest you actually look for more trades that match your discipline. You see, that's part of that emotional certainty, folks. The strategy of trading isn't watching the screen for the trade you're in, because you've already used stops. You have exits as well. You know, we're going to talk about that here during the show. And I want you to have a consistent action with precise outcomes. When you understand the expectancy of your trading system, you have precise outcomes. What I want you to do is I want you to have consistent action, and that's focusing on finding more trades. Maybe you happen to be a person that says, hey, Steve, increasing, instead of having 105 trades and just simply increasing, or 108 trades, increasing it by 50%, that's just what an average person would do. I'm above average, and I can do more than that. Well, maybe instead of 158 trades, you're going to have 175 trades a year. What that would give you, folks, that would give you a 50% return. Do you understand here what I'm trying to share with you? It's understand what the expectancy of your trading system is. If that gives you a good positive number, like in my case here, a 0.28, a 0.38, a 0.48, whatever that gives you, folks, then use that. Make sure that you've got enough trades. Make sure you have 100. When you get to 75, you're getting pretty close. When you have 100 or more trades, you can rely upon the expectancy. You're going to have a distribution of wins and losses. You can't control which trades and how they're going to come. But what this will do, this will allow you to stay in the game. You know you're going to get a streak of wins, a streak of losses, and you just continue to go out and you go find the next pattern setup. Because when you know the expectancy, all you're doing is you're becoming a treasure hunter, and you're focused on increasing the number of trades that you can find out there. Now, you can always increase your capital. Maybe some of you have got more than 100 grand in capital, or maybe each of you can add 10,000 a year or 15 or whatever your number is, an extra 5 or 10%. So that's another way that you're going to grow it. But the biggest opportunity that you have, folks, in growing your business is using the patterns that you trade and going out and finding more trades. Maybe you don't have the time and you're going to leverage that. Maybe you'll use a service like mine, that produces a 30+% return. Maybe it's one of the other TFNN contributors here, and you'll have multiple newsletters. That way, you've got more trades each year that you would be able to take. Folks, this is our July 4th edition. This is all about your financial independence. When we come back, we're going to go take a look at how you actually build your expectancy table. Folks, I absolutely love being here with you. Hopefully you're having some nice fireworks today, and maybe I'm lighting a little fireworks for you so you can see how you can absolutely get the type of return that you want over the next 12 months, folks. We'll be right back. stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom while he is away on vacation. This is our special July 4th edition. If you're just tuning in, you'll want to catch the archive of this show because this is about financial independence. You can go to the homepage of TFNN.com. You'll see the Tiger TV button. This show is archived on Channel 5, recommended viewing, and I recommend that you view this over and over again. I'm teaching you the single most important tool, and I've got several of them, but if you just learn this about your trading system, this, folks, will give you emotional certainty. And emotional certainty, folks, is a decision. It's not a reward. Now, to pick up where we left off, we're talking about understanding the trade expectancy of your system. We've broken our system into three categories: winning trades, losing trades where we lose exactly what we risked, as well as losing trades, the third area, losing trades where we lose a little bit more than what we risked. Now, you want to set up your table like this. If you're a spreadsheet user, then you'll easily be able to do this in either Excel or the Apple numbers spreadsheet, or you can even do this manually. But make sure that you do this. The columns that I track here, I track my buy date, I track the symbol and the description. Those are easy. Now what you also want to track, folks, is you want to track your entry price. Where do you buy the stock at? And just as important, where is the stop that you placed at the time you got into the trade? Not a stop that maybe you adjust, but exactly what your stop is. So in this case here, on the first trade back in June 2011, the SSO, the Ultra S&P 500 here, your entry point, $48.63, your stop, $46.72, and where is it that you exited exactly? So those are the three things that you need. The rest of these are just simply computations. You see, your share risk is the difference between your entry price and your stop. So in this case here, $1.91 is the difference between $48.63, your entry price, less $46.72. That is what you're risking per share. The second next column here is your share profit. Where do you exit versus where you entered? In this case here, we exited at $54.45. We had entered at $48.63. That gave us a 3.05 to 1 reward to risk. I want you to think of reward to risk. That is where your total focus is going to be. This is what you set up both for your winning trades as well as your losing trades. Let me move down here a little bit further. We'll take it now. What you're going to do is you're going to take that column of reward to risk trades here, and all that you're going to do is you're going to average them. So Excel has got a nice tool here where you can just simply show the entire column, and it'll give you the exact average. In this case here, the exact average is 0.98. That means for every dollar risk, we made 98 cents during the year. Now, what you'll want to do, folks, is if you don't have the average tool, you can just sum them up and divide by the number of trades. I also keep track of the date a trade was sold, the exact number of trades that we have. And if you set up a spreadsheet like this, this will all you'll need. This will be all that you need for the rest of your life. You're going to do the same thing here for your losing trades. So here you've got your losing trades. Again, it identifies the exact same information. So your column headings, they never change. You're just inputting new rows for each trade. When they close out, was it a winning trade? Was it a losing trade? Did you lose 100% of what you risked? In this case here, if you do, your reward to risk is going to be a -1 figure. Maybe you've adjusted your stop. Take a look at this trade here, September of 2011. We got into Jaguar Mining. Our entry point was 467. Our stop was 389. As the trade moved up, we adjusted our stop. We actually exited at 460, or maybe there was another reason that we exited at 460, but our actual per share risk was 78 cents. That was the entry point versus the stop, less the stop. And when we exited, we had a 7-cent loss. This is how, by managing your trades, by managing your money, you end up with your controllable risk trades of losing less than 1%, losing less than 1. And then you're going to have a series of trades where you're closing trades where you have a stop that your stop it gets gapped over or what have you. In this case here, you can see out of the 100-plus trades we had 2, 4, 1, 2, 3, 4, 5. We had 5 trades where we just simply had risked 100%, and when we got stopped out, our average was 1.46. So that is what you want to do. This is the tool, and I'll go back here real quickly. This is the tool that you want to be able to set up. This will give you the data and feed you the information so that you understand exactly what your factor is, what's your winning factor, your controllable loss factor, and then just simply what your uncontrollable loss factor is. That is coming from your expectancy detail here as you summarize each of those columns. Then it's just a matter of taking the number of trades and just simply doing a distribution. Over here on the right-hand side, I have my number of trades. You can see 63% winning trades, 32% losing trades of 1% or less, and then simply 5% of 1% or more. Now, what I want to do next here is I want to go ahead and let's take a look at the understanding the power of 1%. Now, you know, some of you may be saying, hey, Steve, if I only risk 1%, how can I make $30,000, you know, like you did annually for your subscribers here? Risk, folks, is different than what your total investment in a stock is. As an example, if let's say you buy a stock for $30 and you risk 1%, let's say 1% happens to be $1,000, and let's just say that your stop is a $2 stop. So you have a risk of $1,000 and a $2 stop. If you take that $1,000 and divide it by 2, $1,000 was our risk here. That was 1% of our trading capital. That would tell you to buy 500 shares. 500 shares times the $30 that it would cost you to enter that trade would be $15,000. So you can see you're risking 15% of your working capital, but you're only risking 1%. And one of the things that traders or investors don't do, certainly for 70+% of you out there that have your money being managed by a professional, not really much of a professional in my opinion, because they don't use stops. Don't take my word for it. Give them a call and ask them if they use stops on your trades. They'll give you every reason in the book. Unfortunately, they won't give you the right reason. So for those of you that manage your money, those of you that have self-managed retirement funds, always use stops. Now, when you're using stops, because, as I said, trading is 80% psychological, the other 20% is just in your head, you want to make sure, folks, that you stay in this money game. And in this case here, if you take a look at the number of losing trades that you could have, each time, if you just simply started with a balance of $100,000 and you lost in the first case, let's say you had 16 losing trades in a row. And you only risk 1%. The first trade, you've risked $1,000 on $100,000. Now your balance is down to $99,000. Maybe the next trade is 1%, so that's $990. If you had 16 losing trades in a row, folks, you'd still have 85% of your working capital. Do you think you still might stay in the game? You might look for you might want to better understand your trading expectancy of your system. But if you had 16 trades in a row, that's a bad streak, most certainly. But you'd have 85% of your working capital. If you could do that, how would you feel? Now, just turn it the other way around. Using 1% of your risk, and just a trading system here where you just simply have a 2-to-1 reward to risk factor here, that would net you a 37% return just on 16 winning trades in a row. So I want you to understand that power of 1%. More importantly, what I want you to do is I want you to go over to the homepage of TFNN.com. I'm going to take you over here right now, and what I'm going to do is I'm going to show you where there's a special tool that I have. On the left-hand side, you're going to see a little slider, an up arrow and a down arrow. Hit the down arrow until you come up to the item labeled the power of position sizing. Click on that. Go ahead and sign up for it. This is a tool that you can use for 30 days. I'm going to show you how you actually use that tool in order to be able to place a trade, because what's so important about this tool is this will help you to calculate your stop. So go to the homepage of TFNN, do that now, sign up for the position size tool, and again, you have use of it for 30 days. What the position size tool looks like is this, folks. It looks exactly like this. What you're going to do, let's say that you decided that you're going to go ahead and trade. We'll use Apple Computer. AAPL is a ticker symbol. So you're just simply going to go ahead and input the symbol, the instrument that you're going to trade. You'll hit the search button, and what that will do is that will pull up the stock. See how all of a sudden it populated with Apple. So your pull-down window is going to give you 3 choices. In this case here, Apple is a stock. Maybe some of you trade the SPYs or the Qs. That would be an index ETF. Maybe some of you trade the XLF, which is a financial sector inside the S&P 500. That would be a sub-index ETF. We're going to choose stocks since that's what it is. Let's say, and this gives you the choice to either go long or short. Let's say you decide to go long on this stock. And let's say your investment capital is $100,000. I'll put in $100,000. You put in your free trading capital right here. Now, what automatically gets calculated for you is this tells you exactly what the average daily noise of Apple is. At present, as of today, the average daily volatility, meaning from high to low on an average day, Apple goes up $8.64. Now, when you're placing a trade, folks, you want your stop to be outside of the average daily noise. You see, you and I, we can't control what happens on an average daily basis, but we know this information. When we have this information, we know that we need to not place a tight stop, but make sure that our stop is at least $8.64 outside of where we enter that stock. This case here, that was Apple. Now, when we come back, let's say we take Apple, and let's just say that right now it's actually trading somewhere around. Let's say we're going to enter a trade on Apple at 570. And we're going to go ahead and exit it around 770. Let's say that was our trade. You hit the calculate button here, folks, and what this will give you the entire trade setup, exactly how many shares of Apple you should be buying. When we come back, we'll finish off, take a look at the position size calculator. This is July 4th, folks, and this is all about your financial independence. Again, my name, Steve Rhodes, filling in for Tom O'Brien, author of Mastering Probability. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the July 4th edition of the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom, and happy July 4th to you. This is all about your independence, and it's really about your financial independence. When we left off, we were taking a look at the position size calculator. So if you're just tuning in, folks, you can catch the archive of this show on Channel 5 under recommended viewing. I recommend that you do this and you replay this a number of times, because actually the tools here that I'm sharing with you will totally be able to set yourself free. You may have to spend a little time with it. That's why we've gone ahead and we've archived this so you can replay it a number of times. You can always reach out to me. You can get me at steve@tfnn.com. And you can always test out my newsletter. You can test drive that, folks, for 30 days, money back, unconditional guarantee, and you can check that out at the homepage of TFNN.com. But this tool here that I'm using, the Trader's Edge Mastering Probability to the Position Size Calculator, you're able to get that on the front page of TFNN.com as well for free for 30 days. Now, we were taking a look at the Apple stock here, just taking a look at how you would use the position size calculator. And what this does, folks, see, the time that you are most objective about entering any type of trade or investment is before you're actually in it. So if you knew that trading or investing is 80% psychological and the other 20% was just in your head, what better time than to do all of the homework up front and then go ahead and place the trade, place the investment in order to be able to enter in and get the stock, whether you're going long or you're going short. Have everything already worked out ahead of time. If you're not sure where to place stops when you go ahead and you enter something, then use this tool, because what it does, folks, it automatically gives you what the average true range is. So here in the case of Apple, I'm going to go down to the bottom of the stock here, and as soon as you type in the symbol, this gives you on each day exactly what high to low is. This also takes a look at if there's a gap up or a gap down, and it accounts for that. You can see in the case of Apple, as we're taking a look at it, it had a day where you had a range of $17.52. That's the highest range that it had. You also had a day where the low range was $5.07. So the factor here of $8.64 is the average of 10 days. And I know that you don't do anything average out there, that everything that you do is outstanding. It's the reason why in a volatile marketplace, we use some multiplication factor of the average true range. You see, you can do all of the homework, go ahead and place an order on the stock. Maybe it's some type of pattern, and you say, maybe it's a swing point, and you say the stock, if it trades below this, then it was the wrong trade. That also assumes, folks, that you know where it's going to close, you know what the average daily noise is, and I don't want you to be wrong on a trade. I don't want you to be right on a trade, but wrong on the stop. And oftentimes, people think in a volatile marketplace, we're certainly in one of those, that your stops should be tighter. Just the opposite, folks, because in a volatile market, you're going to have wider true ranges. And so therefore, you're going to take the average, in this case here in Apple, 8.64. You're going to multiply it by one of two factors, I suggest, 1.272 or 1.618. In real volatile marketplaces, use 1.618. That's a Fibonacci expansion number. I won't go into the detail on that. If you listen to my shows, which I do every morning from 9 to 10, and Tom and I do a show together from 10 to 11, I'll teach you about Fibonacci expansion and contraction. But if you use just those two numbers, folks, that would be helping you to put the proper stop in place. So this gave you the stop. If you went ahead and you actually got into Apple at $570, this tells you place your stop at 556.02. And this is not a mental stop. This is a hard stop that you would actually go ahead and you would put in place when you place the order. So this would also tell you you'd be exiting when you got out of the stock when it hit $770. This tells you that you're, by only risking 1%, Two, folks, that's all we risk. We risked on $100,000 in capital. You've risked $1,000. Tells you to buy 72 shares. Now, you would want to round up or down, maybe 75 shares, maybe 70. But the other thing that's of important notice here is that on this one trade, you see, we risked only 1%, $1,000. But because of our stop and everything, this told us that we should buy 72 shares. That would mean if we bought 72 shares at $570 on a $100,000 account, that would allocate 41% of our entire trading account to Apple. I don't recommend that you do more than 10% on any one individual stock, no matter how good that stock is, no matter how well it has behaved. You don't want to have your portfolio so weighted in any one instrument. Now, if this was 41% and you were trading the SPYs or the Qs, one of the ETF indices, so the SPYs is 500 stocks, that's no problem. The Qs, 100 stocks, I would say that's okay. You know, even the diamonds with 30 stocks. I say 30 stocks, you're starting to push a little bit in going with a 40% weighting. So what you can do to come down here is this means you don't even have to risk 1% of your trading capital, folks. In this case here, you actually could risk a quarter. 0.25% of your working capital. Just hit the calculate button. This will come back up here. This will tell you what your proper position size. It says, hey, all you should buy is 18 shares, 20 shares of Apple. That's the position size calculator. Again, go to the home page of TFNN.com. I'll pull that up for you just so you can see, again, where it is that you go to. And over on the left-hand side, you're going to see a little two arrows, one facing up, one facing down. Click up or down until you get there and click on the power of position size. Now, while you're over here, folks, I also have a free special report. You see, I've done a study, and I'm going to cover that. I won't be able to do that in this show. But what I've done is I've done a study going back to 1928. This is a tool, folks, that helps you to understand when you should be in and when you should be out of a market, especially when it comes to managing your long-term funds. I've got 73 years worth of research that I'll share with you. It shows you that if you just simply invested $10,000 back in 1928 and you use this system, let's just say you got in and out of the marketplace. You didn't short the marketplace. It turns out that 10,000 in 1928 is worth about $6 million plus today. On a buy and hold strategy, that 10,000 would be only worth $500,000. If you had the ability to short the market and go along and you use just that one tool, and that's a lagging indicator, folks, at 10,000, worth like about $27 million today. So this is a tool. Go to the home page, click on the special free report. You'll get an email. You'll need to double opt in. That means you'll get an email from us confirming that you want that report, and then that will automatically be sent to you. And you also can go over to the home page. As long as you're on the home page, click on my name. If you go down to the middle section here, you'll see the Trader's Edge. I kick things off in the morning. Just click on that. That'll take you to my page here at TFNN.com, a little bit about me, but most importantly, take you right here to Mastering Probability. You'll click on that and sign up for my newsletter. You can try it out for 30 days. All you got to do is put down a deposit of $149, and there is a world of education. There's over 20 hours worth of education on there. My daily report is about 30 to 35 pages long. I cover the futures market. I cover ETFs. I cover each of the stocks we're in, currencies, you name it, commodities. So there's something in there for everybody, and it's all about education, folks. And I want to thank you. I want to wish you a happy 4th of July. Look, don't be a prisoner of your past, folks. Be a pioneer of your future. Why? Because, folks, you've got an amazing power within yourself. And that power is so strong, it'll bring about miraculous outcomes. It'll produce a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but mostly, folks, build fantastic, loving families. Go give every member in your family a hug. Folks, thanks for being here. Happy 4th of July. It's time to celebrate your financial independence. Take care. Bye-bye now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.